Hello, everyone. I'm Matt Fick from Financial Life Planners, and this is your stock market update for the week of July 23rd, 2024. I got a lot of information for you guys this week. We're going to talk about the market like we always do, rate cuts, and the big rotation. Uh, First, we'll look at the charts really quick and see how the market's doing. And so here we'll look at the S&P. Year to date, the S&P has done really well with a little pullback in April. And you also notice this past week there was a little pullback from a record high at 56.22 down to about 55.50. Now we'll look at the Nasdaq. And now looking at the Nasdaq, a very similar thing to the S&P with that dip in April. Really saw an uptrend year to date from January and a little pullback last week. Now look at the Dow Jones. Okay, and here's the Dow Jones Industrial Average. The Dow tracks more traditional stocks, kind of like Goldman Sachs, Procter and Gamble, and IBM. And you can see that year to date, it has had an uptrend, but not as significant of an uptrend as the S&P and the Nasdaq have. Except for last week when the Nasdaq and the S&P were down, the Dow Jones was breaking out and kind of caught back down here at the end of the week. But why did that happen? Well, if you've kept up with any of the CNBC or market news out there, you'll probably hear or have heard about the big rotation. The big rotation is about stock sectors moving from tech to more of these traditional stocks like the Dow Jones Industrial Average. Why is that happening? Well, that happened in part because of the events that have happened with Trump in the past week or so, and growing expectations of what's to come in November with the election, as well as some growing concerns about the tech sector being overbought and not performing as well going forward as it has in the past year. Now, does this mean we're putting all hands on deck and switching out our Magnificent Seven holdings for more traditional stuff like in the Dow Jones? No, it doesn't. We think it's important to stay the course and ride the waves and the ups and the downs, like we did in April and like we have done for a while, and really make sure that this sector shift has legs and this rally is going to continue growing for the long term before we jump ship out of the holdings that we have now. With that being said, I thought it would be a good idea to look at some of those Mag 7 stocks after they had their down week last week. Here you can see Nvidia was at an all-time high and brought back down pretty heavily, down to about down to about 117 last week, and you can see it's rebounded. It's down today slightly, but it has rebounded back up to 122. If we look at Microsoft really quick, you could see a similar thing, had that pullback last week and has bounced back up to 445. And here we're looking at Meta again, the same thing, all-time high right up here at right around 521, and you could see it pulls back down here, getting down to 459 before bouncing back up this week and doing pretty well. Now, does this mean that a big sector shift isn't possible and that it's not going to happen just because these stocks have bounced back? No, it doesn't mean that. And that's something that we keep an eye on, but we have to make sure that that rally has legs and that that sector shift is substantial and going to proceed on into the future before we make a move to anyone's asset allocations. So we talked about what happened last week with the big rotation. We talked about what's happening yesterday and today with the Magnificent Seven. And so now we'll talk about what's happening later this week. We're in earnings seasons again this week, and earnings are important if you remember from the last time I talked to you because they'll show how a company is doing as a whole and potentially change the stock price based on consumer confidence in them. Two of the Magnificent Seven are reporting their earnings today, Google and Tesla. So we'll keep an eye out for those. The last thing I wanted to talk to you guys about is the core PCE report that's coming out on Friday. The core PCE gauges inflation and is one of the Fed's favorite things to take a look at. So a positive result of that could be a forecasting for a uh, rate cut in September. Okay, and to end the show, I thought I would show you a cool little tool from investing.com about the odds on a rate cut for each of the Fed meetings. Here you can see July, and that there's a 97% chance that rates are going to stay the same. And you can see in September, it's looking like there's going to be a 93% chance of a possible cut. And the PCE report will sway this a little bit depending on what the numbers are going to be. Obviously, this is super hypothetical and subject to change, but just a fun little thing to look at. And that's all I have for you guys today. As always, don't hesitate to reach out if you have any questions by email or by phone call, and we'll talk to you guys next week. Bye bye.